Steve J, Research Manager at BEA Union, and he joins us in the studio. So good morning to you first off, Steve. So at 1.8 price to book and 9 times forward earnings, still not compelling to you in terms of these bank stocks?
Well, given that we look at the macro environment right now, China right now is suffering drought. Actually, you see that the natural disaster might actually causing inflation to spike up. That actually make the policymakers very difficult to actually continue to having the losing policy. Also, actually, you look at that. Also, the other side of the story. Although we don't really have a lot of problem with the bad loans right now, but just to be prepared for the risk of having bad loans later on down the year, might have a threat on having the credit cost increase due to the fact that the coverage ratio has to increase as well.
Did you say drought in China?
Yes.
That might not be good for the banks. Is that what you just said?
Well, the drought itself is not a good thing already. Also, it will raise the food cost. The food cost will cause the inflation to spike up.
Yeah.
When the inflation spike up, it will actually forcing the government that might have to actually increase interest rate to control inflation. And that might be bad for the bank.
I thought possibly with drought, the Chinese authorities might ask banks to lend more. So again, we might see higher loans and possibly higher profit.
But I think right now our concern more is in the possible reason of inflation. If inflation actually went away, that will be one of the biggest problems that right now China is facing.
Now, why are you so concerned about bad loans right now? Because other analysts, other China watchers are looking at these bank stocks and said if there are bad loans, it'll be further on down the line.
Well, it will. It will be a more mid to long-term kind of threat. But still, because of all this uncertainty, also, we don't know when the government will increase interest rate. There's a big uncertainty on that. That will causing people not to actually having a rally in that sector. We are not saying that banking sector is not good, but we are saying that there's not much upside potential on there.
Steve, you got any idea of the size of the bad loan, potential problem bad loan in China? Some analysts have talked of trillions of yuan. It seems a frightening number.
Well, we don't know. That's the big uncertainty there. That's why people worry. And the good thing is actually the bank itself and the government itself is also trying to actually control it by maybe doing some precautions. And also, if you look at that, also they're trying to ask the bank to replenish the capital, raise the capital requirement. Those are the reasons why they're doing that.
And that is the issue, raising their capital base, these banks at the moment. So we know the Bank of China is doing this bond sale. It's going to sell shares in Hong Kong, maybe in Shanghai. This is going to weigh on the stocks?
Yeah, it probably will in the short term. That's why in the short term, we really don't like to get into the banking sector. There's not much upside on that.
Okay, so at what point would you get into the banking sector? You said in the short term. At what point would you say, maybe I'll take a look at these stocks once again, this sector? Well,
if you're a really long-term investor, like you can hold it for 5 years, I think, right now the valuation is really compelling. But you are kind of investor like to speculate, like to go in within a year, I really recommend you to go in right now at the moment.
Okay, so let's get to the sectors that you do recommend, which are consumer staples, healthcare, and clean energy. I'm going to first start off with consumer staples because it seems like everyone is trying to play on the China consumer theme, so it's a pretty crowded play here. But any specific names that you like in this area?
Well, I think if you want to go into there, probably you want to look into more the leading stocks, probably maybe in the coal sector, probably maybe like Shenhua, things like that. Yeah.
Okay, and healthcare as well.
Yes.
Also, another sector that everyone is looking towards in China, since we have Social Security building and more people needing medical health. So, what names here in this regard?
We are still actually focusing on locating one actually on there.
Oh, you're still trying to locate one for healthcare.
We are focusing on that sector, but we are trying to find one with the best possible solutions at the
And okay, so let's talk about the airline stocks, because what I find interesting is that you're actually starting to pay attention to airline stocks now. We just heard these massive fundraising activities coming from Air China and China Southern. People haven't been looking at them for a while, I guess, since they've been losing money really for a few years.
Right.
So what makes them compelling now?
Well, to a certain factor. First factor is we expect RMB under the pressure to appreciate. At the same time, also the travel. If you think about that, right now this year, the focus theme is domestic consumption. And I think China is trying to stimulate a lot of domestic travel. You already seen that in the Lunar New Year. the travel number have actually increased. So that is one of the sector I think we probably will actually benefit quite a bit.
Oh, interesting. And clean energy, finally. Tell me about clean energy. Which names here?
Well, I can't particularly tell you on that one because we still also focus on that. Yeah.
Okay. Well, good luck in finding a name, but that is a compelling story, isn't it, on the
Yes.
mainland, especially as they need more to build the economy, so they want that energy to come from cleaner sources.
Right.
Steve, thank you so much for dropping by today. Steve Che of BEA Union.